for 2021. How about that? S&P 500 daily chart was extremely overbought. And we can see that pullback, we can see that 52-week high up there. And I can tell you, everyone crowded in. 41.91, right below $4,200 level. And we've almost come down 100 points. We're sitting on the 10-day. We got support down here at 40.69 at the 10-day. That's the 10-day. So when we get down here at 39.76 would be the 50-day. S&P was on a rip, making highs after highs, and everybody got crowded into the S&P 500 and some of the S&P 500 stocks. And the pullback or correction, whatever you would like to call it, is underway right now. And tomorrow morning, we'll probably see lower prices on the S&P. S&P, in my view, is still overvalued during this time frame. Netflix is not going to help the markets tomorrow. It missed its earnings. The bank stocks have been rolling down. The value trade, the infrastructure trade, all of that, all of those have been selling down as well. So it's been a broad-based sell program for the last couple of days that we've gone straight down. When the volatility index, called the VIX, hit an all-time low, we knew right then and there that the pullback would start, as it has. Look for lower prices or lower prices, as I always say, in the S&P. And we do have support down here at the 20-day. And that's roughly 40.58 from that 41.91 high. And we still have more downside to go. And it's only healthy. We still have a daily buy signal on the S&P at 4.9. That's this. But that moving average convergence divergence has been falling. And look for lower prices tomorrow. With the earnings season starting today in full spring mode, Netflix missed, and that is going to gap down some of the markets. Everybody was too bullish. And this earnings season is going to be mixed. And there's going to be a lot of volatility in this earnings season. And it started. It's underway now. And it's going to get more progressive as we move forward. The problem is a lot of stocks were front running ahead of all of these earnings that are going to be released. We definitely need to see a bigger pullback in stocks that would be healthy for the market. And it would be healthy for investors to buy the dips. They tried buying dips 2 days in a row in the S&P 500 leadership stocks, and they got whacked. And they did. And it's not doom and gloom. No one is saying that. But that trade was crowded, and it needs to pull back. That is healthy for the market. So one of the things that we're going to say on the S&P's low was 41.18. Last print was 4134.29. Was down 28.97 or 0.70%. And look for lower prices in the S&P, giving everyone a warning. A lot of volatility is around the corner. Crowds were traded. Exuberance was in the market. People were hyping up stocks. And this is what happens. This is why we get pullbacks. Shake out the buyer. The bull is still in control of the S&P. And they are. That's the good news. And working the overbought to pulling back from being overbought to where you can buy good stocks in that S&P 500. But I will caution you, there is more volatility around the corner during this earnings season.